Okay, good afternoon, everyone, and thank you so much for sticking around for this next session. I'm Dan Murphy from CNBC. I'm absolutely thrilled to be here, and I hope you're all enjoying the party so far. We were just talking backstage about how it has been such an interesting week. Actually, I'll double down on that, an interesting year for crypto, and we're going to dive into some of the trends that we're seeing right now. Even by this industry standards, I think we have a lot to talk about right now. First of all, on Monday, Bitcoin whipsawing nearly 8%. We've seen it reclaim around 90,000 USD today, but it's still down almost 30% from its record high in early October. What's also interesting is that around $20 billion in leverage positions have been wiped out in the most recent slide, and some of the market's most important indicators are also flashing some caution right now. You don't need to hear this from me, you know this all already. What's interesting as well is that funding rates in the Bitcoin perpetuals market have also turned negative. Traders moving capital into stablecoins rather than aggressively buying some of these dips. Now, against all of that backdrop as well, it's also interesting to see that there is a really strong counter-narrative filing out as well. Institutional inflows through ETFs. There's a growing stablecoin economy driving real-world payments. We have a maturing investment ecosystem as well. And jurisdictions like right here in the UAE providing regulatory clarity, even as some other core markets pull back. So to unpack all of this, the volatility, the on-chain signals that we're seeing, the institutional picture, and what the next cycle might actually look like, we have three people who are really shaping the future of this industry from three very different vantage points. So, Richard, I'll kick it off with you. First and foremost, thank you again for pulling us all together, and congratulations on the conference so far. Let's give Richard another round of applause, folks. Walk me through the week that we've seen in crypto, particularly in Bitcoin. What are you seeing in terms of real-world transactions on the platform right now? And is anything you've seen this week giving you cause for concern?
Well, first of all, just let me thank everyone for joining us, including Brad and Lily. Brad flew 20 hours here. Lily was just around the corner, took 20 minutes right here. But regardless, very, very thankful for the support and the love. I see somebody there with a placard stating that Brad is the digital Fed chairman. Where's that? The digital... Stand up, stand up.
And the queen.
So you can see a lot of support around the arena. Very, very grateful. But as you know, in the last few weeks, right, I think you talk about volatility. It not only happens to crypto, happens across the different asset class. US equities was impacted as well. The US shutdown and lack of data, again, contributed to that as well. But, you know, we are still very bullish. I think that we share the same view. We're still very, very bullish for the long term. The institutions are coming in a big way, and the allocation is still very small at this juncture, right? So the corporates, the family office, all starting to deploy. And with greater regulatory clarity from the likes of Genius Act, market structure bill in the US, that's forcing all the governments around the world to take notice and to reposition themselves in terms of competitive edge. We think that the best is yet to come, and the momentum is going to be very, very strong.
The best is yet to come. Brad, why do you think the bears are back in the market?
Well, why the bears back in the market? You know, look, first of all, thank you for having us. I think this is an incredible event. It's my first time to join this event, but hopefully look back to being next year as well. And obviously good to see you both. Look, I think crypto has gone through cycles. And when you have risk on, people are excited. They are, you know, now you have kind of a risk off moment. There's uncertainty. I personally will echo some of the things Richard said. There are so many macro factors that are continuing to provide tailwinds for this industry that I think as we go into 2026, I don't remember being this optimistic in the last handful of years where you do have, as Richard said, regulatory clarity in the largest economy in the world. And I think people underprice this. 22% of global GDP is the United States, and this is a market that has been really openly hostile to crypto for 4 or 5 years, or maybe longer. And now you have that has changed significantly pretty quickly, but the institutions are still catching up with that to some degree. You saw Franklin Templeton on stage here, you saw BlackRock on stage. Just this week, I think Vanguard has now opened up, you know, Vanguard historically has said, we won't touch crypto. And now they've had a massive sea change. That's just one of many things that are creating those tailwinds. And so I'm super optimistic about the year ahead. The last thing I'll say on this, which I think we'll also probably all agree about on this, is we are also seeing real-world applications where it's not just about the speculation. You're finding easier to use interfaces so that crypto isn't just about the speculation, it's about solving real-world problems. And to sustain that long-term optimism, that long-term bull market, I think you're going to see more and more of that.
We're going to talk more about what's happening with institutional adoption, and I'm glad you mentioned it. I want Lily's take on what's happening in the market as well, because Solana has been one of the most aggressively bid up through this most recent upcycle. What are you seeing right now, and are you concerned?
Sure. I've been in this industry for over a decade now, and I think that one of the things that you've got to be able to accept, stomach, and learn how to lean into is the volatility of the markets. When you're dealing with the scope of ambition that we have here in crypto, peer-to-peer electronic cash system, right? Digitizing finance in a way which is accessible to 5.5 billion people. These are exponential outcomes, and you're going to have non-linear ups and non-linear downs. And what has always created this industry is these extremely volatile, irrational markets, frankly, and there are Newtonian laws of markets as well. Irrational up, you're going to have a correction. So I think it's pretty clear to everyone that there was a huge amount of interest driven by DATs. There's DATs for everything, basically from April until about the end of September, and that irrational liquidity window is going to have a correction, and that's exactly what we've seen. And that should not be a surprise. That is not a surprise to many of us. And in fact, having lived through many of these cycles, I remember when $800 Bitcoin was a bubble. And then there was $150 Bitcoin, and of course the world was ending then as well. So I think we're doing just fine at $90,000 Bitcoin.
What's interesting, though, is that we have seen billions leave some of the largest ETFs in the market, too. And there was meant to be this institutional floor under the market as a result of the adoption that we're seeing, but also these new capital flows. It's beyond just the retail investor. Was the ETF moment overhyped, do you think? Lily, take that one.
Well, I will note that actually there is one new ETF on the market that's been seeing daily inflow since it was launched. That is the Solana ETFs. So there's always bright spots in the market that maybe I observe a little bit more closely than others. But there are bright spots in the market. And I would also expect that over this tremendous cycle of where Bitcoin has ascended to these incredible heights, $120,000 Bitcoin, yes, there's going to be a correction. I remember way back when my guest Wi-Fi password was Bitcoin 100K. And I did that back in 2016, and everyone thought I was crazy, and now I have to change my guest password. So,
So what's the password now?
Yeah.
I don't know, what should it be?
250K or? Yeah.
We'll just keep on adding zeros. So,
Brad, what's your take on this too? Do you think the ETF floor was overhyped?
Definitely no. Look, obviously what you were describing is all data correct, but I think you got to zoom out a little bit further and realize that this ETFs didn't exist because of the regulatory problems in the United States. They didn't exist, and in the last 2 or 3 weeks, over $700 million have flown into XRP ETFs, which is just it's pent-up demand from institutional investors, from investors who want access because they don't want to custody themselves, what have you. But look, again, if you zoom out to the macro level, the total ETF market, only 1 or 2% of the total ETF market is crypto. I will bet anybody here that a year from now, that will be more than 1 or 2%. There's going to continue to be inflows, and yes, you can take a snapshot of time and say, okay, there's a billion left Bitcoin ETFs or whatever the data you cited a moment ago. But if you zoom out a little bit further and say, okay, over 2026, do we really think crypto ETFs are only going to be 1 or 2% of the total ETF market? No chance. And so that, again, it's one of those macro tailwinds where Ripple sits in a position where we see, particularly from our Ripple Prime, the prime brokerage business, we see a lot of interesting activity where institutions that have been on the sidelines, maybe because of regulatory clarity, maybe because of risk aversion, for whatever reasons they've been on the sidelines, they're getting involved. And they're starting small, and they're going to walk, then they're going to crawl, then they're going to walk, then they're going to run. And I think it's going to create a lot of tailwind.
So this moment in the market hasn't necessarily spooked institutional capital. That's what you're saying?
Definitely not.
Okay. Richard, you'd agree with that?
No, definitely. So if you look at just data on our platform, right, over the course of last 2 years, which has been exceptional, because you have to remember prior to 2024, it's largely a retail play within crypto. And last 2 years, because of the regulatory clarity that's coming through, US changing from being anti-crypto to now supporting crypto in a very big way with the ETFs coming through, and with financial institutions all starting to embrace and support that. On our platform, we saw doubling of institutional onboarding last year, and again doubling of this year, right? So they are still coming through in a big way. But as you know, for institutions, corporates, family office, they take a long time to do their own due diligence. The onboarding process is much longer. So they'll come, but it's not going to be all together at one point in time. We're still very early in the process. We're about 8% global crypto adoption. And in our conversation with many corporates, with family offices, it's just a matter of time. They're all going through their own deliberation at this point in time, and they'll be coming on board on that front. So we're bullish for the long term. Again, going back to Brad's point, you have to take a longer term view of things. And there's a saying within crypto, every time if the market is down, every time people say Bitcoin or crypto is dead, if you put money into it, you'll be in a very healthy position now.
What was also interesting through this most recent market turbulence was that even as we saw cryptos falling, money was moving into stablecoins, which suggests that we are also seeing money staying in the system rather than moving elsewhere. Capital has lots of options to move, but instead decided to move into certain stablecoins. So how do you see the stablecoin system evolving over the next few years, and where are we at in terms of maturity right now?
I would say that we're going to continue to see acceleration. So if you look at the market cap of stablecoin, it has grown by 50% this year. The number of wallets, again, grown by 50% this year. And I think more and more institutions, as well as corporates, are realizing that it solves a lot of pain points, going back to Brett, your point. If you look at the current infrastructure in the banking space, right, if you want to do a cross-border transfer, you have to go through SWIFT, one or two correspondent network, take 2 days for the money to be received at very high fees. But if you do via stables and do via crypto, it's instantaneous at a fraction of the cost. There's certainty, right? So if you look at many corporate treasuries around the world, they are moving assets into stable because it allows them to manage their assets and funds on a 24/7 basis, moving from Indonesia to different parts of Europe instantaneously. They can have much greater capital efficiency and velocity on that front. So we're going to see a lot of that, and with clarity coming out from the likes of Genius Act, it gave all the financial institutions pause for thoughts on that front to say, look, this is a much more superior technology, is much cheaper, much faster. So we are going to see a lot of financial institutions issuing it, but also the big e-commerce players, right? So the likes of Amazon, I think they're going to issue their own stablecoins because it's so superior and they can manage their merchants' relationship much better with the likes of stablecoins.
Let me ask you specifically about this as well, because we saw a real-world example of this earlier this year. The MGX investment into Binance, financed using USD1, backed, of course, by World Liberty Financial. What does that unlock?
Well, if you look at MGX, they are AI and financial investor powerhouse on that front. They fully realize the power of digital money and digital future together. So they have picked a stable coin in terms of the mode of payment, and we welcome that. We are crypto native and digital native. And so it's a much more efficient way of movement of money compared to the traditional fiat rails. And we host stables on our platform to satisfy user needs as well. And I mean, even with our regulated entities globally, with regulators, we highlighted to them the use case, the importance of it, and why this is much more superior in terms of even holding our regulatory capital in terms of stable coins instead of putting them in banks.
Raised some eyebrows, though, didn't it? Were you surprised by the reaction?
Well, a lot of them still have a lack of understanding of the pros, the benefits, how it works, etc. So it's an educational process, even with the regulators around the world.
Brad, can you talk a little bit more about the institutional adoption here and what you're seeing in terms of real-world payments as well on the stablecoin side?
Well, I mean, the stablecoin point you're making particularly, I think you are absolutely right that as people kind of went risk off, they stayed on stablecoins, which is indicative of, as Richard's describing, the utility, the 24/7 nature of a stablecoin, but it's also trust, where maybe years ago they might have said, I want to get into a fiat that I trust even more, but people are recognizing that stablecoins can be stable and easier to manage. But look, this region in particular leaned into regulatory clarity early. Ripple launched a stablecoin just over a year ago. It's just passed about $1 billion market cap. But now it's also been approved in, whitelisted in Abu Dhabi, as well as in Dubai and the DIFC. It's good collateral on various platforms from a lending point of view. And I think that the tailwinds just on solving real problems and good collateral that's easy to move and is more flexible and can be moved multiple times a day even, that wasn't possible before. And I think we're going to see a lot of unlocks that, when Ripple thinks about this, and it's an honor to be up here with these two, we want Solana to do great, we want Binance to do great, because I think we're still bringing people into the ecosystem. Stablecoins are one way of doing that. There are going to be lots of other applications, some that Ripple builds, some that are built in the Solana ecosystem, and some that Binance builds.
Lily, what's your message to traditional finance here and people like Jamie Dimon who have gone from rat poison to pet rock on this?
Well,
is he still at Pet Rock? I thought he actually came further than that.
He did come further than that. I think it was around 2017. It was rat poison. Warren Buffett as well, so he was in good company. And then 2021, we got a Pet Rock, sort of moving up in the world. And I remember when IBIT launched, then Jamie upgraded his opinion of the ecosystem into my daughter owns Bitcoin. So I think that when you're building these disruptive technologies, then there's always this competitive as well as cooperative relationship that you have with institutions, which itself is not monolithic by any stretch of the imagination. And so there are areas that we very collaborative with institutions. I think the most collaborative is on asset issuance. The way institutions see that is, well, this is new distribution to obviously a very wealthy group of folks. I can now distribute my money market fund, my private credit fund, and as folks that primarily monetize AUM, the value proposition for that is very clear. And there's also value proposition for institutions around much more transparent back-end usage of blockchains, and that's where if you think about it just very pragmatically, your $100 million a year of tech R&D spend can go down by however much. That's pure sort of bottom line contribution. So I think those are some very real reasons. And those, I think, when you're actually in these conversations, that's really the focus of how people are thinking about working together. And we'll leave the rhetoric for some fun forums.
Let's talk about how you intend on growing each of your respective businesses from here as well. And Lily, I'll start with you because you also said recently that speed and low fees aren't necessarily going to be enough to bring the next generation of users into the ecosystem, even into crypto in particular. So what would you say is missing, and what responsibility does Solana have here as one of the fastest growing networks in building the infrastructure that will be required to facilitate this development into the future?
Sure. I think that for me, I try to remind myself going back to basics. Actually, I recommend every so often just to go read some of the original Bitcoin Talk forums. A lot of clarity of thinking. All of the use cases have been discussed, outlined more than 10 years ago. And I think that ultimately, outside of digital gold, all of the others, every single thing that people are trying to build, programmable blockchain, so on and so forth, is no longer digital gold, the digital asset side of things. Only Bitcoin gets to be that. Everyone else is trying to be the native financial infrastructure of the internet. That infrastructure accessible to 5.5 billion people, and fundamentally, we are tech for finance. Not tech for tech, not tech just for developers, that's part of it, but that's not the end goal. This is tech for finance. And so if you think about what does finance need, there's just some really basic core requirements that financial systems, financial markets require. Speed and cost is table stakes. Programmability is the whole arc of 2015 up until now. That's obviously very important. There's a well-proven thesis around why tech platforms that enable developers and enable applications and broadening the utility around something, in this case around money, is fundamentally useful. And I think that also liquidity, of course, liquidity is king. So if we were to boil it down, it's really around speed and cost, liquidity and utility, and putting all of those things in the same place. It's not actually that complicated at the end of the day, and that's one of the things that we've architected Solana for at the very beginning, which is why Solana is heretical at the very beginning, not to have L2s, not to have shards, not to have sub-chains or anything like that, because I think that's always been the vision. Clarity that this is tech for finance, and that's what markets need.
What's the North Star for Solana then? Do you have an end goal?
I think Bitcoin articulated it for all of us, the peer-to-peer electronic cash system. Bitcoin presented sort of the first part of that, this blockchain architecture. But the question has always been, is it possible to build this sort of TCP/IP for money? People have characterized this so many times over the last 18 years. But is it possible to build that sort of native financial infrastructure for the internet? So we digitize all content practically. And if you think about assets, if all assets become tokens, you basically digitize all assets into financial content. Is that possible? And then create this sort of unified infrastructure and also therefore unified liquidity and sort of unification of applications to bring maximum utility to money, and also to make that accessible to not just all users, but also the part about financial inclusion that few people talk about is also inclusion of issuers. And the inclusion of issuers to be able to access global capital markets from wherever you are, that you don't have to go wrap yourself in a corporate structure between Hong Kong and Bermuda or BVI and whatever it is into New York and go pay $15 million of lawyers' fees and banker fees in order to after 10 years of being in the trenches, to be able to have access to global liquidity. So, to me, the inclusion story here is not just on, let's call it, the retail side with the unbanked around the world. That story is very relevant and has been discussed a lot, but it's also around the supply side in global capital markets. But ultimately, there's infinite ways to think about why unifying the utility and really the assets and liquidity of 5.5 billion people is interesting and useful.
And it's interesting as well because we talk about this on CNBC all the time, but we're essentially seeing the rewiring, the replumbing of the global financial system in real time, and each of your businesses has a role to play in that as well. Richard, I wanted to come back over to you because under your leadership, we've also seen Binance expanding quite significantly. What is the next big growth market for you? Because you're also pushing into licensed markets in particular, helping to develop regulation in some of the markets where you're operating too. So where to next?
Well, there are so many bright spots, right? So we deploy internationally. By today, we have close to 300 million users. Our ambition is to bring in the next 1 billion users into crypto industry, and we are all working together on that front. But if you look at it, there are many bright spots around the world. Latin America is moving very, very fast. Different parts of Asia Pacific, this region, Middle East, again, is growing very quickly. But in terms of rules and regulations, they are still not uniform throughout the world. There's a lot of harmonization that needs to be done. And many countries have still not developed their framework. Just now, I was just talking to a user from a different country who said, hey, my friend wants to buy a million in Bitcoin and finds it very difficult because in that country, they still experience the banking issue, right? And there are still too many hurdles, right? So how do we work with global governments around the world, policymakers around the world, to remove all these unfair hurdles that's imposed on crypto, that's not imposed on any other sector, including the banking sector, right? So the more we can work together on that front to bring in a uniform set of standards, to remove the debanking issue, to remove the hurdles, you are going to bring in a lot more people into the industry, and by industry partners working together to really embrace crypto adoption, deployment, building the use cases together, which is extremely important, bring across much better education for the masses of what this technology stands for and how it changes the lives of so many people around the world. I think those will be very important for us to continue to grow.
There's going to be a new leadership structure at Binance
Yes.
as well. I'm wondering if you could maybe take us inside what that change is ultimately going to mean. And as an extension to that, I have to ask you as well, do you think President Trump's pardon of CZ has made it harder to demonstrate that Binance has changed?
No, No, so if you look at it, right, so we have made some missteps in the past, in the very early days, but really the landscape then was totally different, right? Even today, the rules and regulations are just still developing, still quite nascent. The US again went from anti-crypto to now providing clarity in terms of rules, but if you think about many other places in the world, they are still not giving that clarity in that space, right? So in the early days, we make some missteps, but as with all responsible entity, we acknowledge them, make amends, and invest greatly into the areas of compliance. So by now, we are the most regulated entity globally, with 21 different jurisdictions spanning the globe in terms of different areas. And we will continue to invest very greatly into the areas of compliance. So if you look at our compliance headcount, it accounts for 22% of our global headcount. So about 1,300 people in compliance working across the globe to make sure that we uphold high standards. Compliance spend goes up 30% year on year for the last 2 to 3 years. And this is an area that we will continue to invest quite greatly in. So today we are very, very excited to announce a new leadership structure with He as co-CEO. And He is not unfamiliar to many people within the crypto and Binance infrastructure and ecosystem, right? She's a co-founder, she has been there from the start, and she has been driving a lot of changes and driving the growth of Binance. She's very passionate about community, user focus, building our strategy from bottom up. And we will continue to work together hand in hand. Today, Binance is a much more complex organization than before. We see our growth continue to grow quite exponentially globally. So we started 2024 with 170 million users. Today it stands at 300 million users, and the pace of growth is going to be very, very, very exponential going forward. So we need a lot of support from not only each other, but also from the senior leadership team to continue to navigate the path forward.
Really looking forward to seeing how that continues to evolve and how the business continues to grow. You know, I've got to say, one of the privileges of being a CNBC journalist is that I can ask whatever I like. I never give away my questions in advance. Richard never knows what he's going to be asked, and he always takes my questions with such pride and also such transparency. So thank you for being so honest with the questions there, Richard. Speaking of the big guy, President Trump in the US, let's flip it over and talk about what's happening stateside, because, Brad, you've also said in the past that the US regulatory environment is, and I quote here, hostile. So do you think that's changed for the better? And what are you seeing right now in terms of the regulatory roadmap in the United States that will ultimately impact your business as well?
Look, I think one of the things that Binance has done incredibly well, the numbers that Richard's talking about 300 million people, they're bringing people into crypto. We all want, there's an echo chamber that we all experience of people in crypto. But the amazing thing about the passionate pioneers that are here in this room is they've been in. We just want that audience to grow. And I think what you're seeing happen in the United States with regulatory clarity, Richard earlier referenced the Genius Act. The Genius Act is regulatory clarity for stablecoins. And you're already seeing more institutional interest in stablecoin payments. Ripple purchased a company called Treasury recently, which has visibility into over $10 trillion of payments from their corporate customers. And the number of those customers who are already, the acquisition closed Monday. The number of those customers that are already approaching us interested in leveraging stablecoins for the flexibility, for better yield, for as a trusted resource, because of that clarity, people are leaning in. We don't yet have, obviously Ripple went through a long lawsuit with the US government, and XRP received regulatory clarity from the federal courts. We have been championing, and I know Team Solana has been championing regulatory clarity for crypto broadly in what is generally called the Clarity Act in the United States. There's still forward momentum on that. I don't think it's going to happen this year, which the President Trump has kind of championed. But I think sometime in the first half of next year, we'll see passage of legislation, which will continue to unlock and create more tailwinds for the whole industry.
Okay, so we have about a minute left, so I want each of your Wi-Fi passwords for 2026. Before we wrap it up, just quickly, where do you see Bitcoin by the end of next year? I want a simple answer from each of you. Let's make it fun. Richard, what is it going to be?
Stronger.
Oh, can you put a number on it?
Now I can't make a price prediction, but I'm a long-term holder, right? So I'm not looking at short-term price volatility, but I hope nearly changed her password to Bitcoin a million. Right?
Lily, batter up. What do you think?
We're going to be over 100K, guys. It's all good, guys.
Brad?
I'll go out on the limb and I'll say Bitcoin 180,000 December 23rd or December 31st, 2026.
All right, where's the prediction market around that now? It'll be live in 2 seconds.
Ladies and gentlemen, we are rapidly running out of time, so I want to thank my panel for joining in today, and thank you all for listening in. Enjoy the rest of the conference.
Thanks, guys.